The broadcast is now starting. All attendees are in listen-only mode.
All right, good afternoon, everyone. Today it's Thursday, January 10th. It's about 12:50 Chicago time, so I'm starting a little bit early. I do that because I have to go over the disclaimers. So I figure, since the phones aren't buzzing and the market's kind of trashing around here, let me close that. I would get the disclaimers all out of the way so we can spend a good hour going over setups and observations and stuff like that, okay? So the goal this afternoon is to go over the trade setup in slow motion. All right, after I go over the setup, then we're going to jump inside the platform and we'll look for those setups in a live market setting, and I'm going to show you how to enter the trade and how to put a stop in and how to manage them from start to finish. Throughout the process, I'm going to make some observations, some of the traps that people kind of fall into, and the idea really is, why do I have that up? The idea is to, really, if you're brand new, this is going to be a great syllabus for you. That's the bottom line, okay? Because once you go inside the training room, you're going to see Michael put trades on, take them off. Sometimes it gets fast, and it kind of whizzes by you, and then, sooner than later, all of a sudden, you're going to get an email from the CFRN saying, hey, sign up today, and you're like, what just happened? My attempt is to kind of slow things down so your eyes are wide open. And so after the trial, if you want to take, and go down that path, hey, you're going to make an educated guess on whether you want to do that or not, okay? All right, stand by. My phone's buzzing. All right, sorry about that. So again, for the new guys, this is going to be a great syllabus for you guys to lean on, okay? Returning CFRN members, guys that have already been in the room, that are hanging out, they're already CFRN members. This is a good chance for you to get some more screen time, get to know the markets you're trading, ask me questions. Again, I get a lot of emails and screenshots and stuff like that, people asking me questions about setups and stuff like that. I'm going to take some of that information and share that with you. Those are those, again, those traps that people kind of fall into. So if they are struggling or getting stopped out or whatever, I'll see some of the common kind of themes that I see, and I'll share that. So hopefully by the end of this, or a few weeks of this, you'll maybe you'll get it. Maybe we tip the scales a little bit in your corner, and then you can move on. Okay. So that's the game plan. Okay. So we're gonna, for about an hour, we're gonna knock this thing out and see what we can do. Okay. Throughout the process, ask questions, and it is being recorded, so you have that flexibility. Again, I'm at the desk. Markets are moving. So if the phone does ring, I'm going to put you on hold. I'm going to hit the mute button. Don't take it personal. I'm just kind of just to let you know this hasn't been pre-recorded. This is live. So that's a scoop. Okay. All right. So let's do the disclaimer part. Knock this out. So again, I really don't like throwing the disclaimer up there, telling you to take a few minutes to look at it and then shove it back down. I like to take a few minutes to talk about it because I do think it's important. And being in the business for almost 25 years, I've really seen the good, the bad, and the ugly. So I like to talk about it so everyone is on the same page. Okay. Okay. So, disclaimer. Basically, you can lose. Basically, trading is risky. This is a leverage space. You can lose everything and some in your trading account. This should be risk capital that you're putting at risk. This disclaimer really is meant to scare the new guys, okay? The guys that are just getting into our space, learning about futures, not knowing what this is all about. Basically, this is to kind of scare you, okay? So, basically the guys that don't have a trading plan, that are not using stops, that they're not watching their account, they're not, watching the markets, they're not engaged in what's going on in the marketplace. Usually those guys that, are opinionated and just trade their opinions and not look at what the market's telling them. The disclaimer really hits them in the face really hard. Okay, they get a reality check right away. Okay, so that's why the disclaimer is up there, because you can lose everything and some in your trading account. Okay, doesn't take much to blow through your cash if you're not doing some of those things. Okay, just to put it bluntly. And I know it's probably scaring a few of you guys that are brand new, but that's the reality of it. Okay, with CFRN, right? We're going to go over rules, right? We're going to go over the trade setup. So you do have a trading plan, right? We do have a trading plan. We always use an 8-tick stop loss, so we're using stop losses. We use aggressive risk management, and we're looking at the market under a microscope, so then we have to be engaged in the marketplace. You'll also have to be in front of a DOM, or right, the tower here. This is where we buy and sell things. So if we're getting long, we're going to left click on the green. If we're going to get short, we're going to left click on the red. So we're going to do all that. Okay. So the bottom line is you're going to have to be engaged in the market. You'll be in front of the screens. Okay. So what I'm saying is, the scary disclaimer is still out there. Okay. But if you go down the CFRN path, that'll water that down a little bit because of those basic things that I just went over. Okay. In the end, if you're doing all the right things, okay, you put the stop loss in, you're in front of the screens, and you have a trading plan. If you do all that stuff, yes, if something goofy comes out, news item, newsworthy, and the market spikes up or down, there is a possibility your stop will not get elected, and you'll still be stuck in the market. All right. If you're down the CFRN path and you're in front of the screens, because that's where you should be, the good thing about that, you'll be in front of the DOM here. That's the tower here. And if that did happen in the end, at least you'll be in front of a screen and you could hit the exit button. What you would do is you'd hit exit at market and cancel. That gets you out of the market, okay? And that would cancel any outstanding orders, okay? So, again, the disclaimer is out to scare everyone. It's there for good reason, okay? Especially the brand new guys, okay? The guys that usually get to CFRN, they start knocking on their door. The guys are already numb to this, okay? Because they've been to this guy and this guru and this system and all that other stuff, okay? So you guys in that category are kind of worn out by this, okay? You guys get it, okay? So that's the long-winded explanation of the disclaimer, okay? Again, I could just throw it up there and not talk about it, but there is risk in trading, and it should be highlighted. Okay, the next disclaimer, Daniel's Trading, CFRN, okay? This goes over my relationship with CFRN. No, I don't work for CFRN, and no, CFRN doesn't work for Daniel's Trading. There is a line in between us, okay? Basically, CFRN are the educator. They have trading tools. They have software. They have the indicators, right? If you go down that path, you're going to talk to CFRN about it, okay? I support the platform that's in front of you, and the platform that I go over this afternoon is DTPro. Their indicators, which you're seeing here, if you're brand new, is the CFRN indicator set. It's built inside the platform. So I support the platform. I can support the indicators. I support the brokerage, the execution. Not only that, I take it a step further. Number one, I'm doing CFRN Thursday for an hour. So there's a mutual benefit, right? If I'm here for an hour educating our guys, if you do well, I do well, right? There's a mutual benefit. So I do take it a step further. I'm in the room every single morning. So I know the trade setups. Okay. If Michael's ever out, I can come in and make some comments about what I'm seeing. Okay. So not only do you have, the platform and the execution part, but you also have the support, someone that knows what you're doing. Okay. And basically we spoil you at the desk here. All right. And if you need to get a hold of somebody, you guys know you can always call that 866 number and you get a hold of me. So that's a good thing. Okay. What was I talking about? Oh, yeah. So that's where I sit. CFRN. If you decide to go down the CFRN path, as soon as you hit the PayPal button, that is your business between them, you and them. Payment plans, any exchange of money, that's between you and them. Anything in their website, videos, members areas, Thursday night workshops, the Logic 247, daily doubles, all that stuff, you would correspond directly to them. Okay. So there is a line. There's no commingling there. It's separate. It has to be separate. And CFRN really, they've never said, hey, a big question I always get is, hey, does CFRN get a portion of the commission that you earn if we do business with you, Bert? The answer is no, they can't, but they never asked. So that's kind of how the relationship sits. Okay. 8 years ago, it was just, when I was introduced to them, it was just a radio program, CFRN.net, and it was just talking about markets. And I ran into Dwayne about 8 years ago, and he said, hey, why don't you pop in on the radio program and we'll talk markets. That's how it started. And then what I noticed is that a lot of people were just asking Dwayne, show us how to trade, show us how to trade, show us this, show us that. And then eventually he teamed up with Michael, and they created the indicator set. And now it's available on my platform. It's also available on Ninja. So it just happened to work out. The timing just kind of worked out. Okay. So that's kind of how it all started. Okay. And that's how the relationship sits. Okay. In the end, I'll be real honest. The indicators are on Ninja. If some people use Ninja. So that's at your fingertips. Okay. You're just not going to get the same support you would if you do business with us. All right. Enough of that, right? All right. Disclaimers are checked off. We've done that. There's a question. Hi, Bert. If I want to trade just basically, is that doable? The other thing, like passport, I would like to just do the basic trading. Yes, Joyce. Joyce's question, if I wanted just to trade the basic way you teach, is that doable? Well, absolutely. The other things like the passport and the 24/7 alerts are a little confusing, which is fair to say, Joyce, and I don't mind talking about it. I would like to just to do the basic trading, and it is. Not everyone is everyone's cut up differently. Okay, so you just got to do what's comfortable with you. That's it. Are you comfortable with the risk for each trade you take? Are you comfortable with executing the trade on the platform? Right? Are you comfortable with the DOM? Are you comfortable with moving stops? Can can I see a trade setup then move into the DOM? It all takes practice. So when I actually prefer, I do a lot of swing trading and I do a lot of overnight trades. I started when we didn't have platforms like this. So the only way we could make money is swing trading. And so we didn't have this technology. So I'm more of a swing trader than a scalper, like Michael. But, you know, when things are slow and things aren't going on and I see a setup, I'm confident enough where I can just go inside the DOM and push a button. But I'm not staring at the screen because, you know, as you guys know, I'm talking to you and, you know, doing webinars and screen shares and trying to get everyone up to speed. So actually, it gets busy. All right. Moving forward, right? Shut up, Bert. Get going. All right. This is the trade setup. Okay. By the way, this is a snapshot that was taken back in 2012. Okay. The reason why I bring this up is because the setup hasn't changed. A lot of times I get questions, has it been form-fitted, changed, tweaked, you know, throughout the years? The answer is no. Not on my end. It hasn't. So let's go back to this one because it works. There's other trade setups that have kind of originated down over the years. It's just other members making observations and turning them into trading plans. This is just the one that Michael does in the room every morning. So, you know, that's the one I'm going to talk about because that's the one that I see and I'm exposed to all the time, and I know it works. Okay. First order of business is the time frame. Okay. We are on a 4-tick range chart. Okay. So if you have DTPro, how the heck do you get there? Chances are, if you're brand new, you're on a 5-minute chart. You might be on an hourly chart. Heck, you might be on a daily chart. Okay. We're on a 4-tick range. So what you have to do in the upper left-hand corner, notice the time frame says daily. Just hit that drop-down box and go down to custom. Select the range bar and make that one look like a 4. Now you're on the correct time frame. Okay, we're on a 4-tick range chart. Okay. Why a 4-tick range chart? Well, number one, the height of each candle is always 4 ticks in height. So Michael inside the room could be a little bit predictive. Okay. You're going to hear him talk about highs and lows. In other words, he might say, if the low is 25.8375, then the high has to be 24.8475. Okay, so a lot of times what he's doing, he's buying and selling on stops. All right, so if he knows the highs and the lows, he can actually put an order in advance. Okay, and place the order. So if the market does take off, it's going to stop him into the trade. All right. So he might be buying it up here, waiting for the market to blast through his level, or he might be selling it down here, waiting for the market to break down. Okay. So that's the reason, or one of the advantages having a 4-tick range chart, because the height of each candle is predictive, right? So he can be proactive in placing the order. Day 1 on your trial or day 2, okay, you're going to have to catch on a little bit. You need a little bit of time. That's not for you, okay? But as time goes on and things start slowing down and then you start scratching your head, hey, how did Mike get into that trade? It's because he's buying it and he's selling it on stops, on momentum. And he could do that because he can be predictive, and he's being predictive because he's on that 4-tick range chart. There's nothing secret about it. It's just that's how it's been working out, okay? I'm going to tweak this a little bit, okay? When markets are moving fast, the NASDAQ is moving fast. Sometimes it becomes untradeable on a 4-tick range. You are going, if you really have a thing for the NASDAQ, a suggestion would be go to custom, select range bar, but go up to an 8-tick range chart. It's going to slow it down. It's the same trade setup that I'm going to go over. The only difference is, instead of the stop being 8 ticks away or 2 candles, okay, 2 4-tick candles, right? Your risk now becomes 16 ticks. All right. Again, you're on an 8-tick range, so you're risking the height of 2 candles, right? So now your risk is 16 ticks. All right. So that's the scoop. Okay. Normally we're on a 4-tick range. If the market is moving fast, like the NASDAQ, like the mini Dow, like the mini Russell, you can slow it down a little bit, put it in third gear instead of fourth, and tweak it to an 8-tick range, and that might help. Okay, so something to think about, but your risks double. Okay, so you got to consider that. All right, time frame, check. Okay, we talked about that. Now we're just going to go over the trade setup. So here we go. If you're brand new, this is where we kind of slow things down a lot. So I'm going to work on the top portion of the chart, okay? So basically, this red and blue line here is referred to as the MA1, okay? The green line is referred to as the BBC. That is short for bullish and bearish cross, okay? So together, that leads us into step number 1, okay? So when the MA1 crosses the BBC, that is step number 1. That is the bullish and bearish cross that Michael is talking about in the training room. If the MA1 is red and crossing the BBC, you're looking for shorting opportunities. If the MA1 is blue, you're looking for bullish opportunities. The one that's highlighted here is a bearish cross. Why? Because the MA1 is red. I want you to write that down. I want you to start thinking about color, okay? Because ideally, we want everything to be the same color. If we're in a bearish scenario, okay, we want to see a lot of these things red. Okay, we're going to want to see the MA1 red. We're going to want to see the cycle red. We're going to want to see a red candle. Okay, that's what we want to see because that stacks up all the probabilities in our corner. Okay, so the one that highlighted again is a bearish cross. Note, I didn't say go long, go short, go long. Okay, yes, I know it went down from here. Okay, but after the cross, you're looking for step number 2. It kind of leads us into it. Because a normal thing for the market to do after the cross is to gravitate toward that green line or the BBC, as it does here. Okay? So you're looking for the market to touch, but then close in the direction of the trend, highlighted by that arrow. Okay? What color should the candle be? It should be red. Why? Because the MA1 is red. So now you're getting the picture that we're starting to go down that path. Okay, let me tell David I'll call him right back. So hold on. Well, it's still bullish, right? So we said the dips would be shallow. I think we're saying that, and then we're saying, some strength behind it. So right now I would not be selling this. Okay. All right. Did you cover it 77, 78? Oh, okay. So again, if we get a pullback, I would keep it on a short leash. Okay. Well, I think the only thing left it can do is it could make new highs. So only because the hourly is saying, hey, be careful. We had a dip. They bought the dip, and it's regaining its strength. So, okay, so be a little careful. All right, see you, Mike. Okay. Oop, I didn't hit mute. Okay. All right, so I'm sorry, I picked up the phone. I didn't hit the mute button. All right, so anyways, we're looking for step number 2, which is for the market to gravitate toward the BBC and close in the direction of the trend. Okay, that's what we're looking for in step number 2. Okay, so again, red MA1, red candle, everything the same color. Okay, so after we get step number 2, then our eyes are going to focus on the oscillator portion of the chart. Okay, it's called the slingshot. Okay, when you download it, import it in the platform, it's called the slingshot. Okay, so here are some buzzwords there. Okay, because Actually, the trade setup is going to exist all in the slingshot here. Okay, this is going to tell us a lot. All right, so the nuts and bolts of the slingshot. This blue and red line is referred to as the cycle. Okay, the green line has no fancy name to it. It's just the green line. Okay, the separation between the green line and the cycle is referred to as divergence, or the separation that Michael is talking about in the training room. Okay, so I'm gonna cut this up a little bit. Okay, what this is saying. Okay, here's the cycle. What the cycle is telling you is, look, what color is it? It's red. Red means sell. This is telling us, look, this market is in a downtrend. Okay, we're in a downtrend right now on the 4-tick range. The green line pulling away from the cycle in conjunction with this price action here is suggesting, hey, this is just an air pocket in this ongoing downtrend. Okay, and with the close here in the direction of the trend, and with the separation here, is suggesting, look, maybe that's all it is. It's just an air pocket in the downtrend. This is one little extra clue. Let's get short right on the close of that candle there. Okay? Yeah, 1 second here. All right, sorry. So what it's saying, look, we're in a downtrend here, okay? And this little pop-up here did the normal thing. It pulled back the BBC, and that little red candle there is a rejection of that green line, okay? Everything's normal. So when everything is normal, there's nothing else to filter out. It's time to get short and push a button. That's what it's saying, okay? So this separation here is called the divergence, okay? And what we expect to happen, okay, the normal thing, is for the market to go back up to the BBC, close in the direction of the trend as it does. Our eyes are focused on the slingshot. Hey, we have divergence or separation. The cycle is red. It's saying, hey, the trend is down. Go inside the DOM and get short. Okay, that's what that says. So what we would end up doing is going in the right-hand column here and get short. That's what we would end up doing. Okay. What we expect to happen, again, going back to normal, we expect this, basically this green line, ultimately to come down and touch the cycle. Okay. This is telling us we're in a downtrend. This little air pocket here is just an air pocket in the downtrend, and we expect the green line to come into the cycle. Okay, kind of close the gap. It's at this point we're going to exit the trade. Okay, so what we expect to happen is the market to make a new pivot low in the process. You know why? Because the green line is going to do this. It's going to pull away, pull away, pull away, pull away, until the cycle turns blue. And guess what? That means you're looking for buying opportunities because the color is blue. And so what you're looking for is the green line to pull underneath. Okay, you want the green line underneath in bullish scenarios, okay? So what you end up doing, and this is why the trade setup really exists in the slingshot, you end up selling that, selling that, and selling that, and buying this dip and buying this dip, as long as the market is trending. Okay, as long as we're trending, making lower lows, or if we're making higher highs, okay, this is what you're doing all day. Okay, so in the end, if you go down the CFRN path, you're not learning to pick the top here. and you're not learning to pick the bottom here and trade it from point A to point Z. Okay? You're learning to take a piece out of the middle, all right, because you got the wind at your back, right, with the cycle. And along the way, you have an 8-tick stop attached to it, no matter what. You put the stop in. I'm going to show you how to put a bracket in, so when you enter the market, it's automatically going to put the stop loss in behind it. Okay, that's what the platform will do. Okay? And then along the way, you're going to be using aggressive risk management. Okay, if it goes plus 4 ticks in your favor, you move the stop to break even. What is break even? Your entry. If it closes on or below, above or below the MA1, you're going to move the stop to break even. So you're going to go through a process, okay? But the bottom line is you're not learning to pick the top or bottom. You're going to take a piece out of the middle, okay? So what are you signing up for? I'm on a 4-tick range chart. That means you're going to be scalping, right? You're going for ticks in the market. In fact, you're on a 4-tick range chart. You're looking at the market under a microscope. So and it's rules-based, right? We got some rules to deal with. That means you're going to have to be engaged. You're going to have to be in front of the screen. You're going to have to watch the markets, okay? So you'll have to be in front of a DOM, okay? So that's what you're signing up for. And with aggressive risk management, okay, you're going to have to be, proficient in the tower here. You're going to have to know how to trail a stop and do all that other good stuff, okay? So it's going to take some time to get used to, okay? So that's what you're signing up for, okay? So again, eyes wide open approach is the game plan here. And, if you're wondering what 8 ticks means to you in monetary terms, if you're trading the S&P or the soybeans, if you're dead wrong, you're risking $100 a contract. If it's more like the YM, that's $40 a contract. If it's the crude or the gold, it's $80 a contract. If you're dead wrong, okay. The idea is to get the risk off the table right away. That's the game plan, okay. And if all these, if step 1 and step 2 and step 3 are in place, okay, then you should be able to get the risk off the table. You can control that part, okay? If the market does the unusual and does an about face, well, you get stopped out, okay? You can't control that. You can control the risk with a stop, okay? You can control the risk management by moving the stop down, okay? But, those are the things you're going to go through, okay? So that's the scoop. Any questions on the setup? Because what we just went over in about 10, 15 minutes, we're going to apply right now in the market, okay? So the first order of business is I'm going to get off this crazy NASDAQ, okay? Because it's moving too fast and I won't be able to teach you guys what's going on, okay? So I'm going to go left. You know what? That one's setting up something here. I'm not going to go over it just yet. Let's go to crude oil, okay? First thing that you should be in your mind right now, the first question that should be written down on a piece of paper, are we trending? Are we making higher highs? Okay, that's the first order of business. You guys should get in the habit of hitting this red zoom out button, okay? If you want to know if a market's trending, take a few left clicks here, okay? This will tell you if we're trending or not, okay? Right now, crude was trading sideways. We're trading sideways, back and forth here, right? Pretty easy and obvious. Finally, we break out, okay? So I would say this action right here, we're starting to trend, okay? We had the bullish cross here, so now we're thinking buy pullbacks, buy pullbacks, buy pullbacks, right? All right. What's the normal thing for the market to do? Gravitate toward the BBC. So it's starting to do that here, right? What are we looking for the market to do? Close, touch, and then close in the direction of the trend. It just never did. It just cut right through it. All right. So for the moment, there was a pullback to the BBC, but we never got the up close. And not only that, one of the big fat disqualifiers popped its head up. okay, which is, as I said earlier, ideally in a buying, to get long, we would like this to be blue. We want everything to be the same color, right? Blue. If this turns red on you, as we're pulling back to the BBC, okay, and she starts curling at down at a 45-degree angle against the trend, that's going to negate any trades. That's a big fat disqualifier. Okay, that's one of the biggest traps that people fall into. I actually just went over two of them. One, you get caught in here because the market's not trending. Okay, that's one of the big traps. Because here's what you end up doing, and it's not your fault, but you're looking, sometimes you're looking at Michael's charts, right? And you're seeing this. It looks like it's trending, all right? But if you don't get in the habit of zooming out, you can see something that might look like it's trending on a big, wide screen. But if you take a moment to zoom out, you're going to find out you're caught in chop, okay? So again, one of the big things here is you better practice zooming out because you got to see what's going on left. You got to look what's going on over here, okay? The second one, again, a disqualifier as the red line goes against you at a 45-degree angle, the cycle, okay? That's a big no-no. So for the moment, the crude is just defining a bigger trading range, and we're trading sideways, so there's nothing going on there. Natural gas, okay? Notice the first thing I do is hit the zoom out button, see a little bit more real estate. We were trading sideways here, right? For a little bit. We finally just broke out of that sideways channel to the downside. So right now with natural gas, if we get a pullback to the BBC, okay, that's this green line here. We're going to get short the natural gas, believe it or not, okay? Now, here's another thing that I want you guys to get in the habit of doing, and that is drawing trend lines. You're going to see Michael do it all the time, all right? But here's what I want you to do. Here's how I want you thinking. Number one, are we trending? If you say yes to that, the next thing you're looking for, do we have a bullish or bearish cross? In the natural gas, we have a bearish cross. Why is it bearish? Because the MA1 is red. As soon as you define that, click the trend line button. This is engaging the trend line right here if you have DTPro. The reason you do that, because what do we expect the market to do? What's the normal thing? The market to gravitate toward the BBC or the green line, right? As it's doing that, you want to get in the habit of drawing a trend line. Drawing a trend line. Okay, it's going to take two candles to connect the dots. Notice how the two candles are green. How I connect the dots. The reason why you get in the habit of drawing a trend line, because if the market has so much momentum, in this case, bearish momentum, because the MA1 is red, it may not get to the green line. Okay, here's two green candles again. Draw the trend line. Okay, that's how mine's drawn. That's the way yours should look. But let me labor over this point. If it can't get to the green line, to the BBC, if you get in the habit of drawing a trend line and it closes below that trend line and your eyes gravitate toward the slingshot here, right? We have space. We have that separation, right? We have that divergence that Michael is talking about. This is a sell right here, okay? That's a selling opportunity, all right? The other thing, now you're going to say, well, wait a minute. We want everything to be the same color, and this crazy thing down here, the cycle's blue. What does that mean to me? Well, if the cycle does turn from red, this is what we want to see, and it turns blue on you, the trend line is required. So you have to draw the trend line anyways. So if you get in the habit of drawing the trend line in advance, if this crazy thing turns color on you, at least you're in a position to take action, okay? As long as it's flat, okay? I don't want to see it like this, like we just saw in the crude. I don't want it curling up. But as long as it's flat, like you see here, and we break the trend line, it's game on to the downside. We go inside the DOM and left click. Okay? So I went over a lot there. So again, the highlight, again, to an overview, as soon as you identify that we're trending, making lower lows or higher highs, and we have a bullish or bearish cross, your next action to take is to hit this trend line button here. Why? Because we don't know if it'll get to the green line, and you're going to get in the habit of drawing the trend line, because if it can't, and it qualifies down in the slingshot here, we're going to take action. All right? So let's fast forward. 2 candles. Here's the close below the trend line, right? The trend line is required. Why is it required? Because this is blue, right? All right. The short would have been right there on this candle, all right? Notice how it's blue, and it actually is flat, okay? So in all fairness, okay, if we were trending down and we were in the trading room, Michael would have probably taken this trade, okay? Notice how this thing is curling up, okay? It's starting to give you this hint that this thing's going to be wrong and we're going to have a cycle reset, okay? So I'm not pointing out all the juicy ones, but this one probably would be a stop out, okay? So my point is this, okay? Here's another point. If you want to stack up all the probabilities in your corner, make sure the MA1 is red, we have a down close, so the candle is red, and the cycle is red. Make sure everything is the same color. Once you start introducing blues, okay, or a different color, then you're starting to water down the probabilities. But I'm not going to have as many trades. Well, I'll take higher probability over tons of trades. The house doesn't like you. They want you to trade, but you know, I'd rather stack the probabilities in my favor, okay? And I'm going to make another observation to the guys that are brand new. It might be over your head a little bit, but as a general observation over the years that I've been doing this, after the cross, whether it's a bullish or bearish cross, usually trade number 1 and 2 after the cross is the better ones. As you go 3, 4, 5 deep, okay, at some point the market's going to retrace, right? Gets a little bit, it's going to put a long leg length in. At some point it's going to adjust itself, right? Okay, so consider that, all right? Number 1 or number 2 is probably going to give your best setups as you get 3, 4, 5 deep. At some point, the cycle is going to turn color and start curling up. Okay, that's what's going to end up happening. And then what you're going to hear Michael talk about in the room is called a cycle reset. Okay, that means the cycle is just turning a different color. It's got that 45-degree angle, and all that means is the market's just going to retrace. Okay, it's going to reset itself. All right. If you end up drawing a multiple trend lines, like I do here, quick way to do it, see the select all button, engage it, activate it, then hit the black X, gets rid of it. Okay. Let's go to crude oil. Crude oil is trading flat. Notice I zoomed out. We got caught in some congestion here, and this is final. It finally broke out here. All right. So let's move forward here. Let's quit. Okay, here's the gold, GGC G9. You should be in February gold, by the way. Sideways. Okay, we got a double top, and we got a low here. Okay, zooming out. Okay. Notice how you get in the habit of doing that? Sideways. Okay. If you're unsure, look at dynamic support and resistance. Okay, if they're side by side, they look like a pair of choo-choo tracks. Okay, that's usually an indication, okay, that we're sideways, if you don't know. Okay, so when in doubt, stay out. If you're not sure, then just stay out of it. You're on a 4-tick range chart. Okay, you're going to have plenty of opportunities. Okay, so wait for the easy and the obvious ones. It's the best advice. All right, so gold's not doing anything. Let's go to the currencies. The euro. Okay, here we go. We had a bullish cross here. What's the normal thing for the market to do? Pull back to the BBC, right? In the process of it doing it, we draw a trend line. Okay, this candle here lights the match. Okay, that starts the run. The cycle is blue, and we have that separation of divergence. Okay, if you didn't pull the trigger on that one, you got a chance to pull it here, because that was a close above the downtrend line. And let me stress this, because I talked to someone today about this. All right, it's not the open, it's the close. Okay, actually this would have been a close, but if you missed it, this was another opportunity here. Okay, I'm talking about these two candles right here. The cycle was blue, and we had the separation, so that was good. But if you didn't get in and the cycle turned red on you, look, it's flat. So you had to draw the trend line, but the trend line was already drawn, so good for you. And the close of that candle would have got you in there. All right, for the moment, the euro needs to make a higher high before we get excited about getting long again. Okay, so I'm going, one way to cancel the trend line, just put your highlighter over it, right click, hit remove. All right, let's go fight the S&P here. All right, so right now flat. I'm going to change it to the NASDAQ, and I will change it to an 8-tick range. Okay, we have a double bottom here. Okay, we got to make some higher highs here before we can take action. Okay, so the NASDAQ is a little bit caught up in some sideways chop here. Okay, so I'm going back to the ES, and I'm on a 4-tick range. Okay, ES chart, 4-tick range. Okay, so wait until everyone gets back on the 4-tick range. Okay, all right, so let's go find something we can sink our teeth in. All right, so again, one of those disqualifiers again is there's a couple things here that I can talk about. All right, normal thing for the market to do is pull back to the green line or the BBC. Okay, in the process, what do? We get in the habit of drawing a trend line. Okay, we get the down close. That's good for the home team. Our eyes gravitate toward the slingshot. Uh-oh, it's blue. All right, the trend line is required, and the close below the trend line is required. We get that. But look at where the cycle is. It's flattened in the middle. Okay, if you get faced with this, no trade. All right, no trades. Let's do this again. The normal thing for the market to do, pull back to the BBC. In the process, you are drawing a trend line, because that's what we were taught to do. Bert said to do it. We get a pullback to the BBC, and we got a down close. Okay, uh-oh. The cycle has turned blue on us. That means we need a trend line, and we need a close below. We did get it. Notice how it's blue, and it has that bullish tilt to it. Faced with this, that's a disqualifier. Let's go back to the well. What's the normal thing for the market to do? Pull back to the BBC. In the process, because we like drawing trend lines, we get another one. What color is the cycle? It's blue again, and boy, does it have a 45-degree angle against us. Again, big fat disqualifier. We are trending. We're making some lower lows, so that part of it's good. You just have a market that's a little bit confused right now. Okay, so that was a good illustration on really how to, see some disqualifiers. Again, multiple contracts, hit that select all, hit the X. Bert, also, do you believe that these same techniques work with swing trades, or would you tweak it a little to work those? Yes, they will work with swing trades. Your swing trades, that means on an hourly or daily or some larger time frames, your stop loss has to be commensurate to the time frame that you're trading on. Okay, what does that mean? That means if you're on an hourly, you're going to be risking hourly dollars. If you're on a daily, you should be risking daily dollars. Okay? Because the method is the same. You get the cross. The normal thing for the market to do is pull back to the BBC. You get all that. Okay? In fact, I don't know, let's look at the hourly, right? Okay, this is an hourly S&P chart. We get a bearish cross here, right? That's step number one. The cycle is red. That's good. What's the normal thing for the market to do? To pull back to the green line. In the process, we draw a trend line, right? There is the close below the trend line. Okay? Do we have any divergence? No. We have a good slope. Okay, this is cool. This is red and sloping down. But we don't have any divergence. Not only that, we're fighting dynamic support here. And you know what? Not so good. Okay? Looking at the S&P on an hourly, we're trading sideways, right? Notice your support and resistance dots are side by side. Okay? So we're not trending. However, you do have a bullish cross here, right? The MA1 is crossing the BBC. What do we expect to happen next? Market to pull back to the BBC. What's cool about it is the cycle is blue, but this has some work to do before we can get excited. So to answer your question, yes. Okay? You can. In fact, I'm going to give you even something bigger. Crude oil on a weekly. Bullish cross, pull back to the BBC, up close. Pull back to the BBC, up close. Pull back to the BBC, up close. Where do you think crude's going to head? I don't know, maybe here? That's $57. Okay? So if someone calls me up and says, "Hey, what do you think about crude?" I'm telling him right now to start looking at $57 to start looking to go short. That's what I'm telling him to do. Why? Because of this action here. It seems to be following a path pretty good. Okay? So look at that. If we start getting up at about 57, you're going to start looking for a bearish close. Remember, you're on a weekly scale. That means you're risking weekly dollars. Okay? That can be a lot. Okay? All right, so hold on. Let me put this guy, let me hit mute real quick. All right, sorry about that. All right, so let's get back to trading on 4-tick ranges, okay? I wanted to answer that question because I use this a lot. I use the CFRN indicators on my daily and weekly stuff. All right, so crude's making a higher high, so if we can get a pullback in the crude, we'll look to get long crude, okay? Natural gas, we did have the pullback to the BBC. We did have the down close, but again, the cycle is a wrong color, and it's at a 45-degree angle, so the crude oil needs more work to do. I'm going to go to the gold. Gold is sideways. Note the support and resistance dots are side by side. That is a sideways channel. even though we have the bearish cross. Okay? So some of you might see this, and that looks juicy to get short, right? Get in the habit of zooming out, because those 3 clicks right there might be the difference between you making or losing dough, because what you have here is support. I mean, it could come up here and fail and just fall apart. All right. And that's a great trade because, you know, it just broke support and there's nothing left. There's just an air pocket and you get a runner. But the fact of the matter is you have support here. So there's no trade. We're trading sideways. All right. ES, zooming out. It's got to be easy and obvious, okay? If I get something that resembles a trade, I want to show you the DOM, okay? So I'm going to try to find something. Actually, all right, I was going to do something here in the Dow. I could have done something real quick. All right. Let me go to an 8-tick range. Nah, that's not juice. Okay. All right. So the next one that pops up, win, lose, or draw, I'm going to do it. So I want to get inside the DOM and show you something. Of course, the ES is in Chop Fest, so I can't do anything there. I'm going to go to crude. I know I'm flipping around. Okay. Here's one. All right. So here's the pullback to the BBC. Okay. We're in crude. I'm looking for an up close. If the low is 52.65, add 4 to that. The high must be 52.69. Right click at 52.70. Okay. This is where Michael could be proactive. Now there's a warning flag here, but I'm just doing this to show you how to place an order. Okay. So here's the ticket. Whatever the high and the low is, if you add or subtract 5, that is the price you click on. Okay. Okay, that's the price you would click on. All right, so that's the trend line. Okay, so we identified we were trading sideways here. We broke out of that congestion. Okay, we're looking for the market to pull back to the BBC. We're getting it now. Okay, I'm telling you right now, this is a big flat disqualifier. We do not want to get long. Why? Because the cycle is red and has that 45-degree angle to it. All right, I'm inside the DOM trying to get long, only to show you how the DOM works. I'm going to cancel the ticket, and here's the reason. Okay, we still don't have the up close, and if the low is 52.64, add 5 to that. Our new order is 52.69 on a stop. Okay. All right, I'm canceling that order. Okay, because we made a lower low. Okay. Waiting for a green candle or an up close. So if the low is 63, add 5. You right click at 68. We're waiting for the market to take off, and then we'll take off with it. Will 68 be a close above the downtrend line? Yeah, it should be. It's going to be close. All right. But again, we don't like this action here. Down here is no good. Okay. All right. So again, we should not get you should not have any positions on. I'm going in here just to show you how the DOM works. So that's how you can be proactive. That's what Michael's doing in the room. Okay. He's buying it on the stop sometimes. Okay. Okay, we made another new low, so I'm going to adjust that a little bit. If the low is 62, then the high must be 67. Okay. I'm going to cancel the order. Tired of looking at it. Let's look for something better. All right. So I'm going to do this one maybe in the natural gas. Okay. We're not trending here. We got a double bottom. Okay. This is how your trend line should be. Okay. This is even worse than the crude, so I'm going to take this off. Okay. So nothing going on in the natural gas. If I'm going to do something here, I'd like to at least have a fighting chance to move the stop up. Yeah, bear with me. All right, let's try the indice. The normal thing for the market to do is to pull back to the BBC. Okay. Are we trending? No. We got a little bit of a double bottom here, but the cycle is red. And let's see if we can get a little messy here in the DOM. Okay. So what you can do in the DOM, if you left click on this Tinker Toy triangle on the top here, and if you select buy stop and sell stop, like I have it checked off here, and you right click over the word buy stop and sell stop and go factor in ticks, okay, if you put the factor as 8, it will automatically put the stop loss in for you as soon as you enter. Okay, it will do that. All right, so we had the bearish cross up here. Okay, so let's see what happens. We did make a lower low. All right, so now we're starting to trend. You notice how I zoomed out. So what should we be doing? We should be engaging the trend line, ready to draw a trend line. Okay. So we're looking to get short. And if that happens, okay, get ready to draw a trend line. We're going to go inside the DOM on the left-hand side and push a button. Okay. So we're just waiting here. We got the separation. You guys understand that, right? The cycle is red, suggesting down. The green line is pulling away, so we have this space. Okay. We have that variable kicking in, so that's good. Okay. Let's see it get back to the green line. The BBC, that's a normal thing for the market to do. Gravitate toward the BBC. If I were drawing a trend line right now, it would start off those two candles. Now it looks something like that, right? So let's see. Get to the BBC. Okay. So we're looking for a shorting opportunity here in the ES. Okay. All right. Okay, we're waiting for a down close or up here, so let's see. So if the high is 68.75, what's the low going to be? 65.75, right? So we would go at, 25.85 and a half. I'm goofing off here. Okay, so add or subtract 5 ticks. So if the high is 25.86.75, then subtract 5 from that. 25.85.50 is your sell on a stop. Okay, add or subtract 5. That's the magic number. See what happens. If this does close below the trend line, it should also be a momentum trade. That means we actually close below the MA1 to boot. Okay, and there's some extra rules for that too. Come on. So this is our entry if it breaks down, and then if this gets elected, this is our stop loss. All right, so I'm going to cancel all for now. Okay, let's see if it can get back to the BBC. Notice the cycle has turned blue on us. That waters down the probability, and it requires a close below the trend line. Okay, so let's see. Nope, that's not a close below. Cycle blue. See what happens. That is the close. All right. So that is the short right here. This is our stop loss. Okay. All right. So let's see what happens. So we're short here. It shows you on the chart. Okay. Shows you on the DOM your P&L's moving, and here it shows you right here too. Okay. All right, so here's the deal. We closed below the trend line, but we also closed below the MA1. That is a momentum trade. So the guys that are rookies, this isn't ideal for you. Okay. If you're not really good with the DOM and stuff like that, okay, you're gonna wait for the traditional setup. But here's our stop loss working. All right, it's right here. I'm hoping it breaks down so I can move the stop down. Okay. With momentum trades, as soon as it goes in your favor, you're going to move the stop to break even. All right, so it's going to stop us out. Go on. Notice how when this turn, there you go. So we got stopped out. Okay. Notice this turned blue on us, right? That watered down the probability. Notice this is starting to hook up a little bit. It's not surprising why we got a little bit of grief there. But the purpose of doing this, for the most part, really was to show you how to draw that trend line. And I'll actually go inside the DOM and push a button and see the stop working at the same time. All right. So let's go looking somewhere else where we can look for something juicier, okay? The gold is sideways, or I would jump in there. Okay. See, we did have the pullback to the BBC. You know what? Let me make a point of this real quick. See this candle here? That actually is a down close at the BBC. That wick, okay? There's no body to it. It's just all wick. That is actually a down close. Okay, so if you get faced with that, that's a close in the direction of the trend. This is a bearish cross. That is the pullback to the BBC with a down close. I know it doesn't have a body, but it is a down close. Okay, problem with this again, double bottom. Also, the cycle is red. That's kind of cool, but we're kind of flat at the midpoint here too, right? Pretty indicative of this chop fest that we're in. Okay. All right. The indices fire again. We'll monkey around with the indices. Okay. Let's go to natural gas. I picked natural gas because on Thursdays we have an AGA report. That's a supply number for natural gas. I know it kicks the market around, and I'm comfortable with it. I'm familiar with its little tweaks and quirks and market action, so I'm comfortable with trading it. That's why I'm gravitating toward that. I know it sounds goofy. I went to the Japanese yen here. Okay. Nothing there. British pound. You should be in March. If you're going to roll forward, notice how the Canadian dollar here, it says 6CF9. Yours probably says F19. It should be on H. If you right-click over it and hit roll forward once, roll forward twice, you'll get on the right contract. Okay? This is the Canadian dollar. Okay. The euro. Okay. Trading sideways. I zoom out. Okay. Yes, we made a higher high, but it didn't take long for that market to get back in its range. Be very cautious of this. Okay. I think Brian has asked this question from time to time. Okay. Double top. Hey, this is a close above, and it might suggest game on, especially with this close here. When I've seen this action where it kind of pokes its head and gets back in the range right away, I would hesitate. Okay. Make sure it spends a little bit of time up here. Maybe 1, 2, 3, maybe 2 or 3 candles up above the trend. Okay. That's how I would approach that. All right. And now you can see this is turning red and kind of curling over. That's saying, you know, we might head down from here. Okay. So just another observation. All right. So I'm going to try to go back to the indices again. Okay, so now we have a bullish cross, right? The MA1 is blue and crossing the BBC. The cycle is blue and it's got a pretty good tilt to it. Okay, so what we're looking for the market to do is pull back to the BBC. Okay, so now we have a little bit of resistance here, right? Okay, again, I'm just going to pop in there. So this would be a buy. We're going to look for a pullback to the BBC, and what I do is I go in the green and left click. When I go long, you click in the green, okay? We get short, we click in the red, so we're going to click in the green this time, okay? So we're looking for the market to gravitate toward the BBC. We're not trending because, look, we got some resistance here, right? Notice how I zoomed out. This looks pretty bullish, right? 1, 2, 3. Okay, we got a little resistance going on over here. Okay, it's got to be easy and obvious, but here, let's just go through it. Okay, your trend line should be activated. Okay, and if we get another red candle, I'm going to draw a trend line right off the tops here. Okay, so just follow along here. Okay, so there's the two red candles. Okay, cycle is blue and we got separation. There's a lot of good stuff going on here. Okay, so if the low is 90 1/4, the high should be 91 1/4. So we would right click at 91.50. This is the way to be proactive. Add or subtract 5 ticks from the higher and the low. All right, and then we can get in there. The low is 90, then the high should be 91. Our entry would be 91 1/4 on a stop. Take the low, add 5. Okay, see what happens. Here's the entry. Okay, it's not activated yet, and here's our stop loss. I just want to show you that so you see what's going on. Okay, and the close would be above the trend line. 91 1/4 would be way up here. Okay, so it should be good. Let's see what happens. Okay, we're just waiting for the green candle and a trade above the trend line. A close above. A close above. I don't know. I talked to a guy today, and he was looking at the opening of the next candle. No, it's the close above the trend line. Okay, that's the close. I don't know why the heck I'm not in, but all right. That is the close above. We bought it at 91. Okay. Where's our stop? It's right here. It's automatically 8 ticks away. Why? Because the bracket has already been created here. Okay. So the rule set is if it goes plus 4 ticks in our favor, we move the stop to break even. Break even is our entry point. Okay, where we got in. Okay. Not only that, it'll be a close above the MA1. Okay. So here, I'm going to show you how to drag the stop up. Okay. See the number 1? This is our stop up. Left click over it, drag. Okay, and move it to our even. See that? Left click over the 1, drag it up. Okay. What we expect to happen is the green line to get into the cycle. Has it done that yet? Yes. Get out of the trade. Okay. All right, a lot just happened there, so I'm going to go over what the heck just happened. Okay. So here we go. Basically, we got in here and we got out here. That was the idea. Okay. I'm going to make some observations. So here we go. We're going to review this and then we'll wrap this up. Okay. All right, number 1. Okay, we looked for the bullish cross. We got the bullish cross. The MA1 is blue crossing the BBC. Okay. After the cross, okay, the normal thing for the market to do is gravitate toward the green line, the BBC, right? In the process of doing that, we activate the trend line. We had 2 red candles. All right, we drew the trend line. Okay, why did we do that? Because we didn't know if it'd get to the green line or not. Okay, that's why we did that. Not only that, good thing is the cycle was blue, had a nice tilt to it, and we had bullish separation. We had a lot of space here, right? Eventually we closed above the trend line, right? It's that candle that lit the match, and that's that candle why we got in and went long there. Okay? That's why we left clicked in the green, because left clicking in the green is buys, and we make money as the market goes up. Okay? Now I had the DOM set on a bracket. Okay, that means a sell stop was automatically placed 8 ticks away as soon as I entered the market. Okay, so we had that, and we had a stop behind it. The rule set is, as the market goes plus 4 ticks in your favor, or a close on the other side of the MA1, you drag the stop to your entry or break even, and that's what we did. Okay? Now, what do we expect to happen? We always expect the green line to ultimately close the gap and touch the cycle, right? That the trade exists here in the slingshot. So that's why when we got up here, I was like, you know what, it's time to get out. I hit exit at market and cancel, and it got us out right away. And the reason is because the green line got into the cycle. Because what do we expect to happen after that? The green line to pull away again, like it's doing again, and then the market pulls back. That's why we do that. All right. So to kind of walk this through from point A to Z. All right. Guys, as you zoom out here, and something I said earlier, I'm going to be honest with you, I had resistance there. Okay? It was running into a little bit of resistance, okay? The only thing that was great about this, and you guys will learn with some time, this was blue. This stacks the probability in our favor, right? But look at the pitch of it, okay? It's got a nice pitch to it. You're going to find the slope in the direction of the trend is going to be kind of important, okay? All right. So if everything is the same color, that's good for the home team. It stacks the probabilities in your corner. Not only that, if it has a nice pitch to it, okay, it's telling you, man, this thing's got some momentum. And the fact that we couldn't even pull back to the BBC and we took off is another clue to say, you know what, this thing really has some momentum. Okay. All right, we did have another pullback to the BBC, right? We expected that because we expected the green line to pull away. That's normal. But you know what? This is curling over a little bit. Okay? It's red. It waters down the probability, and it's curling over. I'm not interested in it. Not only that, if I zoom out, again, we have some resistance here. This could blast off and be a great trade, okay? It does that because it's breaking resistance. So you could have a big runner here, okay? You could take the chance. But the fact that this is curling over a little bit, it's not one of those things that are really easy and obvious that you're looking for, okay? All right, I'm starting to lose my voice. All right. It's already 2 o'clock. All right, so here are the takeaways, okay? Number one, we went over the trade setup in slow motion. It doesn't matter if you're on a 4-tick range. It doesn't matter if you're on an 8-tick range. It doesn't matter if you're on a swing trade, an hourly, daily, 5-minute, whatever. The trade setup is the same, okay? You're looking for, number one, the first order of business. Are we trending? That's the first question you ask yourself. Number two, bullish, bearish cross. MA1's crossing the BBC. As soon as that happens, what are you doing? You're engaging the trend line. Why are we engaging the trend line? Because we expect the market to do the normal thing and pull back to the BBC, as it does in this picture. But in the process, you're going to draw the trend line, okay? As it does the normal thing, we look for the slingshot, okay? It's red. That's good for the home team. Everything's the same color. It's stacking the probabilities in the corner, and the green line is pulling away. All systems are go. The next thing you do Just go inside the DOM and left click. If you're going to get short and take advantage of markets going down, you're going to left click in the red. If you're going to get long, take advantage of the market going up, you're going to left click in the green. Okay, that's what you'll end up doing. Okay, the normal thing for the cycle to do is to pull away and then get into the cycle like it does. The market should normally make a new pivot high in the process. It's at this point here, you're cutting the trade loose. Why? Because we expect the green line to do what it's doing now. Okay? And as I alluded to earlier, okay, as the market goes up in our favor, plus 4 ticks in our favor, or a close on the other side of the MA1, there's that buzzword here. We move the stop to our break even, which is our entry, and all the way up until eventually, again, the green line gets into the cycle. Okay? That's it. Some things to keep an eye on. The zoom out button should be a big one. Get in the habit of doing this, okay, because that looks like a pullback. But if you 3 clicks out, 4 clicks out, you notice there's a big resistance point here. Okay. Okay, so get in the habit of hitting that zoom out button. Okay, sorry I had to answer the phone there. Okay. Second thing, okay, you got to keep an eye on the color of the cycle. Okay. Again, if it pulls back to the BBC, which is a normal thing, and that cycle is the wrong color, well, number one, that should light off a flare. Hey, we're watering down the probabilities. But B, if it's curling over at a 45-degree angle, that's a big fat X, and that says don't take the trade. It's a disqualifier. Okay? So the markets need to be trending, number one. Okay? And ideally, we want all the markets to be, everything to be the same color. All right? All right. So my phones are buzzing off the hook. So I'm going to let you guys go. So every Thursday for an hour, we're going to hang out, talk about the same things over and over again. Okay? New guys, this is a great syllabus for you to use, because then when you go inside the training room, you can see what Michael is doing and hopefully absorb a little bit more of what's going on. So at the end of the trial, if once you get the invitation to hit the PayPal button, your eyes are wide open, right? And then secondly, the guys that are returning members, this is good stuff for you guys. It's screen time, learn the personality of the markets we're trading. Some of the things that I'm seeing might be stuff that you're not seeing right away. So I can point some of those bad habits that other people are falling into and hopefully keep you out of those potholes. Okay? So we do it every hour. So I will see you in the room in the morning. I'm in the room every single morning. A lot of times I'm just in the background. So, if Michael does pop up, I'll pop in there and say hello. So that's it. That's the game plan. Okay, so every Thursday for an hour. I did record it. As soon as I get done decoding it, whatever I need to do, then I put it on YouTube. So they'll be on YouTube tomorrow. Okay? So that's the scoop. That's the end. We'll talk tomorrow morning.